Hello guys, welcome to the Human and the Machine channel, where we talk everything Web3 related. I am the human, Chloe, and with me,
Hikaru, the machine.
Today we have a very special panel about the trending topic, real world assets or RWAs. Let's just dive in. So first of all, we have Erik Ramos-Paice. He's the co-founder and partner of Taiboku Capital. How are you doing, Erik?
I'm good. Thanks, guys. Thanks for having me.
Awesome. And next up, we have Cozy Aravinda. He's the COO at Blockstars Technology. How's it going, Cozy?
I'm doing great, guys. Thank you so much for this awesome opportunity and can't wait to talk about RWAs. Thank you.
Beautiful. And Savan Kapoor, Head of Investment of Heaven One. How are you doing, Savan?
Very well. Excited to be here.
Awesome. Thank you very much, guys. So, Machine, shall we start?
Yeah, let's do it. So the reason why we gathered here is because RWAs, right, real world assets, it's not exactly a new thing. It's been here for a while, let's say in the real estate sector. But I think we can all see that in the past year, it's been starting to become a lot more popular, right? A lot more buzzing across fashion, precious metals, real estate, and so many different verticals, even in the consumer sectors. So we want to first, figure out in this show, right, is RWAs really like a viable, innovation for the long-term future, or is it just another buzzword, as we've seen with many things in crypto? Erik, how about we start with you?
Yeah. We've been dealing with real-world assets now for a little while with some of the projects that we're working with. We've had some conversations even with some of you guys here on this panel. So we believe that it is not a trend, and it is going to disrupt, and it's also going to innovate a lot of the current technologies. So yeah, we're pretty adamant that it's here to stay and it's going to change things, and we're looking forward to it.
Yeah, Kosi, what are your thoughts?
I think it's the next evolution when it comes to in the blockchain Web3 space. And the beauty of this is, I think it would not talk about more like about technicality. I think it will talk about more about the use cases, right? I think for the retail investors, this is such an awesome opportunity that it creates some awesome liquidity. So I think from that aspect, the growth is into the hundreds of trillions, right? There's all the locked LTV on there. So I think that will just by itself will be driven by the investors and having the ability to get involved. So for me, I'm super bullish on RWAs over NFTs. So there you go.
Yeah, sure. Otherwise, you wouldn't be where you are, guys, of course. But no, it sounds, yeah, I agree. Next question. What industry problems can tokenized RWAs truly solve? And what are the benefits? Savan.
Thank you. In terms of use cases, you got to bear in mind when tokenized assets or real world assets come in, it's all regulated products. They have some sort of regulation around it. So it's very black and white on what you can do and what you cannot do. So from the real world problems or the industry problems, I think, the financial sector, the real estate sector, having those assets replicated on chain in real time allows for operational efficiency, allows for fractionalization of those assets and distribution, right? So that's the key benefit. And then overall just efficiency using DLT, and it could be across multiple chains, it could be permissioned, it could be public. So all in all, operational efficiency is probably the key for me.
Erik, what do you think?
Yeah, I agree, and I think that there's so many other industries that are coming to the blockchain that are real world assets that people aren't even thinking about. The go-tos are real estate and precious metals is one, but there's even things that are coming across from different sectors like the ESG and carbon sectors, forestry. I can't even think of the word right now, but hospitals, seaforestation, hydrogen biochar. So many different facets of different industries that can utilize the blockchain, and in many different avenues, like what Kossi said before about liquidity, capital raising, even to the point where cutting out the middleman in some of these big, large industrial sectors where like farmers or growers or agricultural people don't necessarily need to have to deal with these large corporations when they're wanting to get to the end customer or end consumer. So.
Okay.
We keep mentioning about the liquidity. Can we provide more context about like what this means, the problems around it, and then how is RWAs solving that? I think Kosi, you might have some thoughts to share.
Yeah, of course. So I guess with for a what is tokenization? First of all, I think a lot of people, we talk about the real world assets. I think tokenization, you have to be able to authenticate. You want to be able to check the provenance. You want to be able to split into multiple, bits and pieces, and then the trade comes at the end. So once you got that, at the moment, like as Erik said, with the I'll pick carbon credits, for example, and they are so disintegrated, and it's a huge thing that the same carbon credit being sold multiple times, right? And there's so much, and the auditors themselves can't keep up. Now, putting that onto the blockchain with those four categories, which I can authenticate and provenance and fractionalization and the trade part, that what give the transparency, the verifiability with anything. Now you got two types of assets. You have the conventional types. You got the alternative, right? So the conventional, you got the money, the bonds, and the stocks, and you got the alternative, which is art and carbon credits, and I mean, like the list goes on. So looking at that, the liquidity is the ability for, I would say, for people to trade as many assets as possible, the speed as well without any intermediate, as Erik mentioned as well. I think that creates the speed to market, and don't have to wait until the weekends or the markets to open to close, of like forex only 5 days, so certain those things will definitely won't be an issue. So I think that's why it would create more liquidity, more access to these assets, would create more trade. So that's what I believe.
I do have a point on that. I think we need to kind of dissect liquidity. Liquidity from pre-launch or capital raising is very different to secondary liquidity, right? Or secondary market post execution. I think we can solve for the former. I think the latter, i.e. distribution and getting that secondary trading and the asset value or NAV, is going to be a bigger challenge. That requires platforms to come in, talk to each other, have price discovery mechanism, making sure the spreads or bid offers tight, so it allows people to kind of trade. And that's going to be a full ecosystem play, educating the end consumer. And it could be B2B, it could be B2B2C or B2C directly, or consumer to consumer as well, right? So the secondary market liquidity is going to be a challenge, and that cannot be solved for day one. It will be an evolution. So I don't want to confuse liquidity. Like, they're two separate things, right? Pre-market liquidity and post-trade liquidity are two different things.
Yeah, it's good to be very specific.
Yeah.
So how about this, right? RWAs, again, there's so many different verticals, so many different examples. I think it's just good to talk about, what's actually happening out there. So what are some, let's say, global companies, any category, that are actually utilizing RWAs and perhaps a successful case studies? Erik, do you have any in mind that you like?
I think real estate's probably the most common one there, and you've got like JP Morgan is doing things with real estate, and even on the smaller scale, there are companies that are branching into the RWAs beyond just the simple real estate. You've got ministries of health and governments now looking into how they can utilize RWAs in different forms of pharmaceutical and medical now. You've got, again, the ESG and the carbon sector and emissions and compliance, scope 1, 2, and 3 emissions is coming to the forefront as well. Even industries such as the precious metals one is starting to mandate what their reports are. So yeah, there's definitely plenty of them out there. I think I'll pass it on to the other guys to if they have any other examples of the ones that are actually doing it in the forefront there. So maybe
Yeah, close to yourself. And if you have any examples, feel free to share.
I think you have to look beyond the real estate sector. So cash settlement on chain for margin calls. That was the biggest talking point over the last 2-3 weeks with JP Morgan, BlackRock, Barclays coming in. I do think if you can solve for bringing cash on chain and having on chain bank accounts, that will create that real world banking financial services use cases that can be adopted, right? So it's not about just real world assets. It's about how do you do settlements? How do you do tokenization of exchange or transfer of assets? Yeah, so I will still go financial institutions, banking, financial services. Those that can create volume and that can give legitimacy to tokenization. When you see the likes of BlackRock doing it, when you see JP Morgan, Onyx doing it, then you have that credibility. It's been done. So retail adoption could be quicker. The ecosystem adoption could be a lot quicker.
I think that's a valid point as well, because when people think of real world assets, a lot of the times they think of just digitizing or making a digital twin of a physical asset. They're not really thinking about the direction that you're speaking of, Savant, in terms of the financial sector. So I think it's a very good point.
Thank you.
Yeah, that's huge. Like the bonds, you haven't even talked about the debt, right? All that can be tokenized and not just the physical assets. And that's what's going to give so much of breadth. And recently the ANZ Bank here, they tokenized the money, and then that used to settlement. They use that from a chain link as well. So that's again like huge in the financial sector. I think they will be the biggest beneficiaries of this, I would say.
Nice. We are already talking
Yeah,
about.
just to.
Oh, sorry.
Yeah, so I want to chime in here. You guys made a very good point because before we've seen like shoes, clothing become a digital twins, and that was like the old narrative before. But as you kind of said, let's say in DeFi, right? What we did before with credit or let's say collateral is you just use other stable coins for crypto, and that's a really small thing. So once we get into this institutional traditional banking side, even like your bank account, your credit score, although it's not physical, right, that can be considered a real asset. And I think that's very important for these audience to know that, yeah, anything can be tokenized, right? Even if it's just a digital account in the traditional finance world.
Actually, very interesting to listen already about all the different challenges that you are already facing advancing RWAs. So could we go more in depth about this issue? Could you mention what are the core challenges you see for advancing RWAs, especially considering the legal and technical hurdles?
Yeah, of course. Currently, what we are seeing is there are so many different layer one and permissioned blockchains have their own assets or tokenization, right? And we are saying, oh, there's not enough liquidity. It's because there's so much, separation. And how, on a perfect world, everything will be on a single blockchain, and it's going to be so easy. And we know that's going to happen, right? So if I talk about the technical side, I'll leave the legal to someone or Erik. Is that technical side of things? If there's a way how we can bring all these together to talk somehow, because they want to have their own ecosystem, right? We can't expect not to because of the privacy aspect, the data security and all that. So, and this is where I was talking earlier is about this Chainlink has come up with this called CCIP, which is cross-chain interoperable protocol. And with that, we can overcome the interoperable issue with different blockchain, and even not even blockchains, and also with the real world assets as well. So we can bring in the bank accounts as well off chain. So not real world, I mean like off chain data. into the blockchain and solve those interoperable challenges. And I'm pretty sure there are so many other different technologies as well, but that's one of the hot tech tips at the moment going around. So pass it on to you guys.
So from a technical perspective, I'll leave it to Cozy, but from a legal perspective and just a full ecosystem play, you have to look at the underlying asset. Where or how is that regulated? Then you build the DLT, or you enable tokenization via DLT to tokenize these assets, bring them on chain. So there, I think the use cases are very straight and very, clear, black and white. Real estate, financial assets, alternative assets as well, they are somewhat regulated. So you can, follow that regulation across jurisdictions. The challenge there is the regulators not actually talking to each other. The interoperability we speak about in DLT, but also needs to come in from the regulator standpoint as well. So if I'm issuing a tokenized asset in the UK, I should be able to market it to Europe or APAC or the US. That hasn't happened yet. And that's the only way you can get that done is for the regulator to be open about it, right? If I want to buy real estate in the US as a UK citizen, I can, the traditional way. But hey, if I want to put this on chain and I want to tokenize this asset, can I do that? Probably difficult because it doesn't talk to each other. Like the land registry department, the banks, the funders, the lenders, the borrowers, it doesn't actually coherently or cohesively combine into one. So that needs to happen, and I think that's going to be the biggest challenge, but it's all an education exercise as well, right? The other thing I do want to kind of mention is the customer base. Who are you going after? The retail customer will be scared on anything DLT related because there's so much bad press out there. There've been so many bad players. So how do we increase that confidence within that direct to consumer channels? That's where you get the platforms to come in and educate. And I think someone should take lead in that education exercise. And that should essentially be the regulator in any jurisdiction, right? That's where you become credible. And that's where you increase that adoption. And then you tap into new liquidity pools, you increase second market trading or secondary market trading. And then you become, a full ecosystem play.
Some of the issues, just on top of what these guys were talking about as well, is the uptake as well. So, even on a business-to-business front, like the supply chain, which is what we're working on as well, is what we ran into is some of these guys and some of these industries are not really in the progressive state where they're wanting to innovate. And there's that the whole "if it's not broke, don't fix it" mentality. So they're not ready for change because they don't believe that they need it. But what we're seeing starting to happen now that's going to push us in that right direction is some of these regulators are actually starting to enforce it and starting to mandate it at certain junction in the actual supply chain, which is good because what you said, Savan, was something that we've been seeing is different jurisdictions like the UK or somewhere in Europe to Central America, those regulators don't talk to one another. So in the supply chain, for example, the first quarter of the entire process, it's riddled with issues that we'd love for the DLT and platforms to solve those, but it's a progressive state. It's not something that's going to be a quick and easy fix because these guys, again, have to be educated on it. And then, what Savan said, it comes down to who's going to educate them. Fortunately, we're seeing some of these regulators coming out and saying that, we're going to start making change. And I believe that's where one of the biggest issues is going to be is the regulations and the education surrounding all of these things. So.
Wow.
Yeah, those are good points. I think for a full ecosystem to work, first off, after tokenization, they got to talk to each other, right? And there's so many different choices and industries. One thing I've been hearing a lot is when we hear about blockchain, okay, it's transparent, right? You can track things. But at the same time, a lot of companies and enterprises don't want public things, or it must be private because of, GDPR, things like that. So let's say I'm a company enterprise. I'm very interested, with RWAs. I want to tokenize and track things for my business. How should I kind of what kind of factors should I consider when choosing a blockchain? Because it's all the way from very public to completely private and everything in between. Maybe Savan, you have thoughts around that?
Yeah, so I mean, it just goes to my core business. Am I in a regulated industry or vertical, or am I unregulated? So that is key. And then the second thing would be for any business or enterprise looking at adopting DLT would be, can I hold myself accountable? Can I follow a framework that actually governs and builds credibility? And I'm not going to say eliminate, but reduces that risk from a regulatory or a legal aspect, a kickback, right? So how can I reduce or limit that? So that's the key. Again, look, B2B, B2B, C2C or B2C, those are just enablers, right?
Mhm.
We have that technology or DLT across multiple fronts, private, public, permission, it doesn't matter, but underlying core business will drive the adoption in that way.
From my side, I always thought about like, what if, say for example, we have this thing in the globally. There's what you call the Financial Action Task Force, right? FATC. Like they have, like say, restricted countries that who you can't transact with, right? So these blockchains, this decentralized blockchain, you have this, like just like Sawan just mentioned, right? You get all these different blockchains. Now, how can they adhere to these laws, the countries? And I think, and also, what if someone lost the RWA for a property? If it's decentralized, how are you going to get it? You can't even burn it. Like, so there should be some sort of I think there'll be some sort of centralization, some sort of personalization, and then, as you said, machine. Not at the moment, everyone's assets are open, right? Ethereum, and Vitalik is already talking about, okay, he wants to bring some sort of a privacy layer on top of that blockchain, so that not everyone's bank account is visible. We had a zero knowledge, so that, and you can implement RWAs on a zero knowledge platform where you can prove that this asset is real. Like say, if you take Tether, right? Tether holds, I think it's on the top, in the top 10 of organization who holds majority of the bonds, right, in the US, right? Now, how can you prove? Now they're releasing constantly. Now the CEO wants to release, even share more details, but how can you bring that off-chain data into the world, into the real world? So there's all of that out there. So I think definitely there has to be a little bit more openness and how that happen, but still there's be some permission private platforms, but you can still prove without being public that these assets are real and it's owned by this person, and it's also governed by the global legal frameworks as well. So until then, I think, as someone said, the governments are going to be governments going to make sure that they protect the retailers. I think that's their biggest concern.
So, because you actually made a very valid point on Tether, right? So they own multiple bonds as proof of reserves, and that's what they want to kind of release. But actually, there's a big issue there, right? They operate like a bank, essentially. They have my deposit from USDT, and they go out and buy the treasuries or bonds or corporates, whatever, right? But those bonds actually pay a coupon, correct? So I want that coupon to be disbursed into that retail flow. It should be, right? It's my money.
Mhm.
That you are custody of or safeguarding, but you're earning interest on that money, right? So please bring it in to the distribution network. That would be my 2 cents for Tether. If they start doing that, then it becomes transparent. It becomes open, right? So that T-bill is generated X%. I'm going to distribute it to my community because that community has helped you build that reserve, right? So those are the stable coin use cases that should be there. You will have as a customer say, hey, you know what? I don't want to store $10,000 fiat into a bank account. I'd rather put that into Tether because I will get 5%, right?
Yep.
Then you get that adoption from retail.
100%.
Nice. Beautiful. Thanks, guys. Beautiful. Machine, any last words? Any question?
Yes, I want to get into The final question, and this
Yeah.
is my favorite as well, and then we're going to put on our visionary hats. We want to ask each of you, right? What do you think are the major predictions when it comes to RWAs, and let's say in your respective verticals or industries, and in the foreseeable future in crypto? So maybe that's like 1 year maximum. Yeah, like what are you really thinking that will take shape, right, in the industry? And maybe Eric, you can share.
Yeah. In the industries that we're working with, we are seeing some of the financial in the DeFi sector, such as goods in transit and short-term capital and access to liquidity in that avenue for some of these guys. So I think we were talking about this the other day, like the coffee bean crisis. There's a coffee bean crisis in Mawali where there's an issue for them trying to get access to capital, and there's a lot of issues between them and the manufacturers that are actually purchasing from the farmers. So having access to a platform that will allow them short-term access to liquidity or capital is one avenue that we think the DeFi sector will go into, like factorizing or invoicing, short-term loans on invoicing. So we could see that playing into a bigger picture of the supply chain, which is the area that we're working with, because there's going to be a lot of data being captured on-chain and off-chain. Again, there will be public and private one for business to business, business to consumer. But we think on an overall, having all of this real-world asset just in general on-chain is going to help these guys with their there's a lot of industries that we're dealing with that have trust and transparency issues, and it's going to bring them to the light, and it's going to help them with credibility and shake off some of these preconceived notions because of their industries and their geographic locations, Central America and some of these African nations as well. So we think that in the next 3 to 5 years that we'll start to see some progress towards that. We're seeing some of these regulators coming forward and educating even their own industries on it. And I think that alongside with the right tech, such as, AI still has its role in these sorts of things with risk mitigation, analyzing and optimization, and cost reduction as well. So I think all in all, real world assets still has a long way to go. We're still in the infancy stage in a lot of these industries, but I think it's going to really help change some of these guys, some of these countries, some of these sectors, and I'm looking forward to seeing that. A lot of growth opportunities.
Nice. Thanks, Erik. Kosi.
Yeah, Kosi, what are your thoughts? Tell us the
All
future.
right. For me, I'm super bullish on humans, and I think we're gonna come around and we're gonna say, okay, all of us as human race gonna make it. So especially in the Western world, we are super lucky. Yeah, maybe we are lucky because of the lottery, right? But when you look at the developing nations, what we think is, oh, we got this access to everything where they don't, right? And I feel like the people from Africa, from the South Asia, the subcontinent, right, and Far East, I want to see them being able to buy a, I don't know, 10,000 of a piece from Berkshire Hathaway, for example, or something like that I think as a human race that would enable us to prosper together. And that's what I think this will do. Yeah, I think that's what I'm hoping, and I think it's going to happen as well. So raise the as humans and give access to some of this liquidity for everyone to share and enjoy.
That's beautiful.
That's my 2 cents.
That's really beautiful. Seven.
Quickly, sorry, Savan. Just before we do that, just something you said there, Kossi, about the humans and some of these other countries. That's also another real world asset that's underlooked as well. Is online avenues or remote avenues for earning income. Like a lot of these countries, like Indonesia, Laos, the Philippines, they have access to, even if they have limited access, they often have access to computers or phones. And there's a lot of companies and corporations that have these APIs, and they've got this vast network of remote jobs that they need data admin and administration, and that's in itself is a real world asset that can actually be shared with anyone from any country, so long as they have a device and internet access, even if it's limited. So, that's another avenue that I think real world assets can go towards in the future. And sorry for cutting you off, Savan. And
No, absolutely beautiful, cozy, Erik. I just want to re-echo what you just said. First, I think frontier markets or the emerging economies that are coming up, LATAM, African nations, Southeast Asia, they're not bound by legacy systems. So the adoption could actually be a lot quicker of DLT and blockchain, right? So they don't have to go through various processes of upgrading technology. They can just go cloud directly. And that would allow for new assets or digital securities to come into the ecosystem. So how do we do that? We educate the regulator in these nations, and they are doing it. They are open to it, right? There was a use case on M-Pesa embedding BTC on mobile devices. That was brilliant, and it's fractionalization of BTC via mobile telephone number that's linked on chain, and that becomes proof of reserve or proof of ownership, right? So I'm bullish on humans. I'm bullish on frontier markets adopting DLT. I just believe that the bottleneck is that human capital that they lack, right? So as technologists or developers, visionaries, we should be looking at enabling these nations to adopt DLT, bringing those certain use cases that are relevant. The farmers, the supply chain financing, that's low-hanging fruit, right? How do I make sure that I cut out the intermediaries? I get paid what is fair for the underlying asset. So brilliant. I think we wrapped it up. So my biggest thing would be the frontier markets that are not bound by legacy systems. And that's a clear winner.
yeah.
Okay, it's all good. Let's not screw it up. Let's end it here.
Good
Guys,
ending.
awesome. Thank you very much. It was great, really awesome to listen to you all. And this humane undertone, it's just beautiful to end up with. So thank you very much, guys, for your time. Machine, anything else to wrap it up?
Oh no, that's all. I mean, please keep building, right?
Yeah.
Keep solving those problems,
Yeah.
and let's say in 10 years, right, we're going to be looking back and be like, hey, we had this conversation together.
Yeah, we made it.
Great.
Yeah.
Thank you, guys. Thank you very
Okay.
much. Have a beautiful,
Thank you for
beautiful
having us.
day. See ya.
All right. Bye bye.
Thank you.
Okay, bye-bye.
See you later. Bye.